Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Friday morning, September 7th, with your grain market morning commentary. Currently, grains are trading lower across the board. Corn's about 4 or 5 cents lower, beans 17 to 18 lower, and wheat 1 to 3 lower. In the outside markets, we have the big monthly unemployment report behind us now, and a little bit of disappointing non-farm payrolls, just 96,000 jobs added there. So the market is kind of anticipating that QE3. We've been talking about this for a while, and the metals are sharply higher, the dollar is lower. We're going to print money, we're going to buy bonds, we're going to do whatever we can to prop the economy up. So, but however, grains are trading lower. Again, these grain markets are very susceptible to go through some sort of correction. The prices are at historical levels. Harvest is underway. Planting in South America is underway. So there are a few different catalysts here that could spark some sort of correction in the market. More importantly, in my opinion at least, we got everybody on one side of the trade. Huge open interest positions here. Markets are supposed to go through corrections. I think they're healthy, and we may get that very soon. Beans, again, 17 to 18 lower. That puts them just below 17.30 in the November contract. The low the other day, after putting in a brand new all-time high on Monday evening, down around 17.25, so we're very close to testing that level. Perhaps we could test $17, maybe even $16.95 by early next week. So we'll keep an eye on that. We did get the weekly export sales this morning. I'm starting to sound like a broken record here, but we have another dismal export sales into corn. However, that market still likes to hang around $8, currently trading $7.94, $7.95. We actually had cancellations in the old crop of about 104,000 metric tons. New crop sales around 129, so you could do the math. We actually only had a net sales of about 25,000 metric tons. The market was looking for 200 to 350,000. That was a low expectation, and we couldn't meet that. So again, at some point, demand becomes the real story. And in the soybeans, it was a little better than what we got in the corn, but still below the low end of expectations. Net sales about 525,000 metric tons in the soybeans. We've seen that there's been very good demand there, but maybe we're starting to see a little bit of demand destruction at these high levels, where we're looking for 600,000 to 775,000. Wheat export sales in line with expectations, actually at the high end. Yesterday I mentioned briefly, the Black Sea region cannot continue the rate of sales that they've had there. We've seen restrictions out of the Ukraine. There's been some talk, some speculation that Russia will do the same thing. However, remember, they're new members of the World Trade Organization. It's not that easy for them to impose these types of restrictions anymore. However, what happens? The price needs to go up to slow down the demand there, and then maybe we see a little shift to the U.S. for corn as the price difference between the two get closer. Then they'll come over here to the U.S. for it, and that's why we've seen some strength in the wheat lately. That's all I have time for now. Again, there's much more to talk about. Please feel free. Give me a call, shoot me an email, check out our website, and there's a lot of research available there. Please always remember that trading commodity futures involves substantial risk of loss and is not suitable for everyone. Thank you.